Good morning, FX Street. It's Mike Conlon of Forex News. How's everybody doing this morning? Existing home sales figures coming in right now. I'm just trying to get a read on it here. And let's see what we have for existing home sales figures. Looks like they've come in just a little bit lower here, which we're getting a little bit of a pullback here. Just take a quick peek at Euro on the 5-minute chart. I guess by now you guys probably know that there was a little bit of news in the marketplace recently. This whole Euro debt deal has popped out. You can see here we're pulling back a little bit. Maybe there's a little bit of resistance up here. I don't know, 141, 45, say. You know, these are the type of days that, to be honest with you, as a trader, I hate. And the reason I say that is this, is that, you know, days when you have this trending action, if you're a shorter term trader and you miss some of the moves, you know, it's really tough to get in and find trades because, you know, your best bang for your buck is going to be that counter trend trade, but it's just so hard when you've got such a strong trend occurring to jump in and take that other side. Now, you know, we could do some short-term stuff here, some scalping, and I'll show you some of my scalping charts in a second. But, you know, to be honest with you, there's just not a whole heck of a lot of meat on that bone. Now, you know, you're saying, well, why did you have such a bad morning? Why is this, you know, why are you not in on this trend? Well, I have one of these APC battery backup deals. I don't know if anybody's got one of those, but for your computer systems. And I guess the thing shut down overnight, shut everything down. I've got multiple computers, and it takes like, you know, 20 minutes to get everything reloaded, the whole bit. And right after I did that, everything seemed good. Now this thing is telling me that the battery's done, and it's got this like cricket chirping going on in my ear. And unfortunately, I can't shut everything down to scope it out and see what's going on because we've got, you know, this webinar going on here. But, you know, if I seem a little bit annoyed or a little bit off kilter, it's because I'm listening to a cricket chirp right now with this battery backup thing. So if anybody knows anything about battery backups, by all means, let me, you know, give me a holler. Let me know what to do. So, all right. So what are we thinking here in the markets? Let's pull this out and take a look at some of the longer term stuff here. All right, we'll just pull this out on the 30-minute chart. Euro, okay, we can see what happened. Broke 140, boom, off to the races. All right, sitting up just above the R2 here, and not quite up to the R3, which is about 142.50. But this trend looks pretty good. 30-minute chart. We've got this candle here. It's closed outside of the Bollinger Band, showing a little bit of a stochastic crossover there, hit overbought. So I could see a pullback occurring, maybe coming back to this R2 level, 140.70. Maybe a sort of a slow trade, but you know, by and large, I just can't see myself hopping into this thing and getting in front of it. Right here is what I've got is a scalping program. Those of you who've been on my webinar before know that this is a Heikin-Ashi chart with the triple Bollinger Band setup. Essentially, you know, we're looking for reversals that occur, and we're looking for short-term scalps. Sometimes they can turn into longer-term scalps. But, you know, when you look at this type of action, you see how the bands are set up. They're fairly parallel right now, so there's not, you know, a ton of movement happening, although it looks like we had a little bit of a move right there. So right now we're just moving a little bit shorter. Carlos is saying pound dollar is better. Pound dollar better for what, Carlos? Looking at just market moves, or what are we looking at? The reversal? Yeah, looks like a little bit of a move there for pound. Perhaps we could pull back to the 20-period moving average here on the 30-minute chart. That actually doesn't look too bad. One of the things I want to look at is you know, 5-minute. Okay, 160.75. Yeah, there's a little bit of a move there. Let's take a look at Aussie. See what's going on with Aussie. Okay, big move higher, up just ahead of 107. Okay, perhaps there's some short action here, you know, but maybe we're going to wait for the pullback here and look to get long at some point. You know, I mean, these markets are flying. Let's, you know, we can talk about what came out of Europe. Essentially, they just announced their bazooka, which is very similar to what we did here with TARP in the U.S. And, you know, as Ed was saying in the previous, you know, segment, you know, the details are really lacking. And at this point, we don't know what's going to happen, especially because, you know, they're not tested yet. So, you know, until they actually get tested and we see what goes on, this is going to be sort of, okay, they've made a commitment to fix things, but exactly how that occurs, we don't know. And one of the biggest problems I think that you have to look at is sort of the moral hazard which has occurred due to the Greek portion of the resolution. All right, basically, you know, Greek gets to reduce their debt by a half. All right, private bondholders agree to this haircut. Technically, it doesn't trigger a default, which would set off credit default swaps, which, you know, a lot of people would be paid out on, and there, you know, could be some massive losses occurring there. But what happens if you're Italy or Ireland or Spain or Portugal? Why don't you get half of your debt reduced? And at this point, nobody's harping about it because there's been, we know about this overhang for a while. But a little bit down the road, you're going to hear someone say, hey, wait a second, what's up with that? Why can't we get a 50% haircut? And it's going to come to a point where eventually bondholders are going to say, you know what, enough is enough. We're not giving haircuts on these other bonds. All right? Will they give haircuts on another bond? I mean, think about it. If you own a bond and, you're required to take back 50% of the losses. So in the previous example, if you had a bond for $10,000, you're now going to get $5,000 back. Well, what happens if you own credit default swaps on that? Now, if you push for a default, you're going to get paid back 100%. All right, so maybe you sit around for a while, collect some of the hefty interest which you've been getting, which that helps mitigate some of the principal loss. All right, and then at some point down the road, you say, you know what? Let's push for default on these things. Let's start driving rates high so they can't service debt in the future. Let's test the ECB. Let's test the EU. Let's test this EFSF. See if it's really got teeth. If there's really any money there. Is the IMF shuffled money in there through the special purpose vehicle? How about China? Have they ponied up? Well, let's see. Maybe it's just a case of this is what we said we're going to do, but we're not actually really going to do anything. All right, so there's a lot of stuff that can happen here going forward. I just don't think it's going to happen in the next 2 months. Next 2 months, I think we're going to see markets rally into the end of the year. And let's take a quick peek here at S&P. All right, you see S&P, boom, since those, 30 minute, let's go back. Let's go back to a 4 hour. No, let's just do the daily, that's easier. On daily, you can see, since we put in these bottoms here back at the end of July, all right, we get the move, we didn't retest the lows, and now we're bouncing. I think we're going to come back up here, all right, retest these highs, not only 1350, but I'm thinking like even higher, up to 1450. Well, why? Well, look at what the returns in S&P have been so far this year. They've been, abysmal. And if you're a fund manager and you had all this cash at your disposal and you haven't made any money this year, in fact, you may be down. A lot of stories being floated around about these guys who are down. What are you going to do for the last 2 months? Well, you can sustain a rally for 2 months into the end of the year. A little bit of window dressing, sell your positions out. Boom, you got some return there. You've made some money. All right, everybody's happy. You don't get fired for the year. And then you start over again in January and get back to a little bit of reality. We've got this super committee here dealing with the debt thing in the U.S., and that's going to be an issue going forward, especially once the rhetoric heats up now that we're in campaign mode, apparently. And, it doesn't look like a lot of stuff's going to get done. Everybody's on their ideological horse, high horse, that is. And, it's going to be a little bit nutty. So that's kind of what we're looking at here. So, look at this here. This breakout here above 1250. I think we can sustain a rally up here to at least 1350, but I'm thinking beyond that as well. We're looking at this is the weekly chart now. So we could move higher. All right, especially now that they're talking about QE3 as well. That's been brought up. Okay, we've got nothing happening on the fiscal side. All right, so Bernanke's driving the boat with monetary policies, printing money. All right, let's funnel some into this EFSF. All right, let's throw some over here. All right, the question I have is that what's going to happen with inflation, right? CPI has been fairly tame here in the U.S., but a lot of other countries, it's pretty high. If we think about what's going on in the UK right now, they're at like 4.5% inflation, twice the target band that the government has. All right, the head of the Bank of England's got to write a letter to the Chancellor of the Exchequer explaining what's happened. So they're more than twice outside their band and their target. So a lot of stuff going on over there in the UK as well. So if the U.S. just continues to export inflation everywhere else, we could see a pretty big boom as far as those inflationary figures around the globe, and as a result, you'd see a lot of these commodity currencies moving higher. The Aussie, the Kiwi, even the Loonie a little bit. But I think with that, you're going to see those prices move higher as well. And that's the kind of thing where to be honest with you, with all this money printing that's happening, it's kind of like, well, wait a second, where is it going? What's happening? I mean, okay, there's, global growth is, stagnant, let's say. It's steady but stagnant. All right, but all of a sudden I think we're going to see prices go higher. And once you get into that situation, right, where you're trying to encourage inflation so much, boom, we could see an explosion of this happening, as people try and park their money elsewhere. Dollar tanking, so QE3 would be very, very bad. And, the fact that they're even talking about it, maybe they're just trying to goose these markets into the end of the year. But, if it came to that point, things would have to get really, really bad here. And, I just can't see that happening, especially, with the politics heating up. I mean, these guys are, pretty crazy here. So, that's kind of the climate that we're in. But, again, I think we're going to see that rally happen. And, if you take a look at some of these risk assets from a longer term perspective, something like, Aussie, even though they're saying that, that the RBA is not going to raise rates anytime soon, that's still a great positive interest carry, and you can see the results right there. Boom, nice move higher. I think we'll be at 107.50 in short order, okay, and then that'll probably serve as the next bouncing point for a little bit of support. So that's really what's been going on. Anybody have anything they want to talk about? I mean, to be honest with you, with days like this, it's just so difficult to get into trades. I mean, all of these are short-term scalps, and I don't want to, say, all right, here, let's place a trade and take 8 pips. That's, not typically what I'm looking to do, but I just don't see any moves really happening here for us that are going to make sense from a reward to risk scenario. All right, Aussie pulling back a little bit on the 5-minute. Probably see the same action on Euro. Yeah, a little bit. Maybe we're going to bounce here off the 20, revisit 145.50. Yeah, there's 25 pips in there. We could stop ourselves at just below 141. It's about a 1-to-1 reward to risk theme. So it's not ideal, but that's something we do. Theme of the seminar is trade made simple. Yes, it is. Trading made simple. And, the idea is that it's not, obviously trading's not simple, but we're trying to strip out a lot of the noise that you see. And, sometimes you look at charts and there's sort of spaghetti charts, there's all this stuff going on, and you can't make sense of it. And, the idea is that we're really just kind of looking at price action and trying to find high probability trades that set us up with positive expectancy. So that's really what it's about. Someone's asking me to speak louder. Can you hear me okay, Rocky? Is that sounding okay? Carlos, Japanese yen, hard to figure out. Yeah, let's talk about the yen, because here's something interesting. I had an opportunity on Tuesday morning to head over to JP Morgan's New York headquarters for a brunch that they put on with their head currency analyst, Kevin Hebner. Interesting guy. He spent some time living over in Japan, and he sort of worked with the Bank of Japan. They come to these guys, these big bank guys, and looking for advice on what they can do. And his target on dollar yen right now is actually at 72. Okay, he thinks yen's going to strengthen further. He doesn't think that that the Bank of Japan has the will to go ahead and try and intervene further. But his second point was that they don't know how to do it properly. All right, he says that they're looking around to do something similar to what the Swiss National Bank has done, the SNB, with that target range versus the euro. And they just can't pull it off, is what it is. So, you might see some minor, monetary easings and some little interventions, but, since they started trying to do them, they've all been ineffectual, and they haven't been able to do it. So he's looking at about, a penny a quarter, essentially, and moving down to 72 yen. So that was his target there by the end of, I think it was the end of next year. So, right now it's kind of, tough over there in Japan. But, here's the deal is that if you think about what's happened there for so long, right, you've had this, policy where let's weaken the yen. All right, let's try and export our way to prosperity. And it hasn't worked, right? They still have massive deflation there. All right, they have, moderate to low growth, no interest rates to speak of. All right, you've got, domestic consumption, it's okay, and JGBs right now are pretty much owned by Japanese citizens. So the government can fund itself for a while, but there's really not much going on there. Well, what happens if they do the opposite, right? And they try and encourage a strong yen? Well, that's going to give them some more purchasing power. All right, perhaps they can make I don't want to say a shift, but maybe they don't have to rely as heavily upon exports through cheap currency. And now they can come up and, not only just do manufacturing, but now you can have some sort of services industry. okay, where now all of a sudden a strong currency is a little bit more desirable. The other thing to think about with Japanese yen is that, a lot of people are saying, well, the yen's really focused on the dollar-yen relationship because those are both of the safe havens, if you will. And, while that's true, the yen, Chinese NIMBY, okay, the RMB over there, that's actually the one that they're looking at because China's their biggest competitor as far as exports and things like that go. And we know that, dollar yen is essentially a proxy because, China pegs the currency to the dollar, so it's similar. But, there can be some divergence there between NIMBY and yen. So that's the one that they really look at as far as exports go. So, if we look here and we just go back, I want to pull it back on a weekly. All right, you can just see there's just been a slow, steady decline here, and yen advancing, dollar coming down, and this looks like this thing can continue to have legs. So, at this point, there's not a ton of movement. People are afraid of the intervention because of the jawboning that the Bank of Japan does. And as Ed was saying earlier, all bark, no bite. So eventually you ignore it, and that's sort of what's been happening here. Just little by little. Yen strengthens a little bit, a little bit, a little bit. And, that's, I think, going to continue to happen as long as, we've got, these sort of policies going on here in the U.S. with the money printing and all that. But, if we can get past, say, first quarter next year without QE3 popping up, without these guys threatening to do it, maybe, I don't know how, but perhaps we get some policies here in the U.S. which are going to start to encourage business growth and hiring. All right, GDP improves. We just had GDP figures this morning, 2.5%. As expected. All right, there's a little bit of a hope that it would come in a little bit better, but it is what it is. But you got to remember that government spending is a component of that figure, right? GDP. Think about what it is. It's consumption, right? Basically consumer spending, government spending, business investment, and net exports. Okay. Well, if you look at that, piece by piece, all right, we know that consumer spending's down. Right? It actually hasn't been as bad as people think. Consumer confidence is way down. Okay, those numbers were reported earlier this week. Those were a disaster. But the spending hasn't been as bad as people think. All right, government spending, we don't even know what that is. There's no budget. Nobody knows what's going on with government spending. All right, business investment, that's got to be near all-time lows. I don't even know what those figures are right now. But nobody's expanding at this point because everyone's afraid of the uncertainty. All right, tax hikes, regulation. Healthcare. What's going on with, the debt? What are people going to have to pay? We don't know. Maybe they'll wait it out till the next election and see what happens. But right now, corporate earnings are coming in. 70% of these companies are beating. Okay, they're beating the expectation. They've gotten themselves to be so lean and mean that, hey, what the heck? You want to improve earnings on declining revenue? Just fire some people. All right, and just the cycle continues. So, if the something can come out of this debt super committee and they can come up with some sort of, agreement, which at this point I find very unlikely. All right, it could set the stage and people might say, you know what, all right, enough is enough. Let's get back to business here. Let's take it easy. Let's lighten up on some of this other stuff. And, the idea is we want to put people back to work. But I think, we're starting to see this movement here where maybe people don't want to work. I just had an opportunity to head down to Occupy Wall Street the other day to scope that out. That was interesting, man. Let me tell you. I got to go back down there today, later tonight, and I don't even want to go past it. It disgusts me, And it's not because people are railing against government or they're railing against banks. I get that, but it's really more of a philosophical debate where, I'd rather not work is what it's really coming out of that. And listen, at the end of the day, I understand the impediments and the injustice and the inequality. All right, but sometimes you just got to say, well, gee whiz, I'm sorry that I can't have my dream job right out of college and make all this money, like people maybe made, during the internet days. I mean, I used to laugh about that. During the internet days, starting salaries were like 2-3 times what I was starting at, 3 or 4 years earlier. Hey, it happens, right? So, anyway, let's see. So Rob doubts that business has anything to do with taxes, policies, and has no idea where to grow. Well, I mean, that's an interesting question, Rob, because let's see here. The idea is that, let's see, if they knew how to profit, all taxes, policies, etc. would have little effect. Well, that's an interesting point. But if you look at it from a pie perspective, right? The idea is that you want to try and grow that pie. You want that growth to get bigger so that, you've got more receipts coming in through your taxes, through whatever. But if you have the pie is not growing, okay, fast enough, and we see that through jobs, all right, we're not getting anywhere near the jobs growth we need, all right? Now all you're doing is, you're getting the same amount of revenue. So they're saying, well, wait a second, let's just increase the pie a little bit and redistribute some of that wealth. Now, I'm not saying that, I'm not totally against rich people paying more taxes. It's not, that's not the issue. All right, the issue is what people think, because if you think about it, you're a rich guy or you're a business, all right, you don't have to grow right now, right? You're sitting there, you make your salary, you just beat earnings numbers, your stock price is up, you're probably going to get a lift because fund managers need to buy and because Bernanke's got cheap money, all right, your life is fine. All right, maybe they're going to jack your taxes a little bit. All right, you're going to rail against it, you're going to complain against it, but at the end of the day, it's not going to, change much for you. All right, but what does it do for, what you're doing in business? Well, you're saying, well, you know what? There's a selection cycle coming up in 2012. It's only a year away. Maybe I'll just wait it out and see what happens. Maybe this current regime loses, and then we can get back to something that I think is going to be more beneficial to me. All right? Is it going to be beneficial for everybody? No, probably not. There's always winners and losers, and that's what happens when the government chooses them. Right? But if you're somebody who's in a position where you could create jobs right now, what would be your incentive to do so? There is none. So why bother? Okay? So, that's sort of my effect on it, But you're right. If there was all this great, economic growth, then companies sure could profit. But, you got to remember that companies can still profit on declining revenue, right? You want to see companies, though, profiting on expanding revenue, higher revenue coming in, all right? More sales, all right? More building, more exporting, whatever it is that you're doing. Okay, you want to see that growth occur, all right? You don't want to see, we're stock's desirable because it's only at, 11 times earnings because, we fired half the workforce and we're able to get the same amount of output, and that's what's happening now. So, you can call it what you will, but I'm telling you, these policies, and I speak to business people all the time, and everyone just says, you know what, this is a joke. I mean, I talked to a small business the other day, all right, 3-man business. They have one employee, so a partnership, 3 people in the partnership and 1 employee, and they just got fined $25,000 because they didn't contribute to, I think it was like the unemployment fund or something, even though they thought that their payroll company was doing it for them. All right, so the guy, their one employee barely makes $25,000. And, it's regulation. It's people coming after you. You got to dot all these I's, cross all these T's, that these guys can't expand their business. Okay? And that's just a fact of life. I mean, we can debate the philosophy behind, equality and things like that, but at the end of the day, it really comes down to just, being able to work on what you're good at and not having to worry about things like, being sued or being fined or being taxed or whatever it is. And that's really what it is. So cheap money is good when you know how to use it. If you do not, then it does no help. In the past, people used to speculate more freely about prospects to make a profit from leverage comparing to nowadays. Well, sure, cheap money can be good, but it also creates that moral hazard. You have to, think about it, is that, when you have cheap money for too long, you get things like bubbles, right? As money inefficiently goes to the wrong places, as government picks winners and winners and losers. Housing market, perfect example. Everybody should own a home. You know what? No, everybody shouldn't own a home. I don't think everybody's responsible enough to own a home. I mean, there are people who, should. But at the end of the day, if you're not somebody who's responsible, then, just because money's cheap, you shouldn't be in that home. And, that's sort of where, I fall on that spectrum. Oh, God, Rob, you're killing me here. You're right. It's poor planning and knowing the expenses side on the 25K issue. Right. Again, I agree, but it's, the kind of thing where, that's a slap on the wrist for most people, not for a business trying to expand. So anyway, I don't want to beat on the politics. Let's go back and look at what's happening here in the market. So, euro on the scalping deal. I mean, not much happening here. 20 range. We're on the 1-minute chart. Not a whole heck of a lot going down. So that was dollar yen. All right, 72 target, and I kind of like what the guy is saying. So it makes sense. In any event, let's see. Back to Aussie. All right. I don't know if we have any longer term carry traders here, but Aussie's looking pretty good at this point. All right, maybe buy on pullbacks. All right, we've got the, this has got to be what, R1 here? This is R3. Wait a second. Let me pull this back and see where we are. Wow. Yeah, this thing's really moved. Maybe we could buy ahead of R3. All right, maybe the 20-day moving average. Let's kind of wait right there and see. 106 on a pullback. I mean, gosh, look at this. Overbought. I mean, is it going to pull back dramatically? Maybe. I mean, there's going to be scalps in here for folks, but, I wouldn't want to get on the opposite side of this trend because I think, this is what the market's really been waiting for, Let's see, oil. How about oil? Does anybody trade oil here? All right, boom, look at that. Now, oil's an interesting animal, and I think we could see some sort of reversal there. I mean, commodities tend to trade with stocks and things like that, but if you think about it, it's really counterintuitive. And, there was a period of time when higher energy prices were bad for stocks, right? Because things cost more for business. But, that's changed, and we have these correlations, which are essentially connected to dollar. And, you see oil move higher when, stocks are moving higher. But, oil in and of itself isn't necessarily it's a place where people are going to store work, and store wealth because, you don't want to be in dollars. Okay, you may want to be in something more concrete. Yeah, we look at gold. All right, gold had that huge move. Let's go back and look. Yeah, we can look at right here from 1650 higher. Part of that was, as the alternate currency move, and the other part was on the safe haven status of it and potential for inflation. All right, so I'm seeing a little bit of a setup here, which potentially we could take here on the euro. All right, maybe we'll get a little bit of a 10 pipper. All right, I'm going to do a quick euro buy here for you, and I'll explain what I'm doing in a second. And we'll just see what happens. All right, I just bought euro. Essentially, what I'm looking for here is on the 1 minute chart. All right, this is a Heikin-Ashi chart, and we've got a triple Bollinger Band set up here, where essentially we're looking to buy once we get towards the outside of the bands, and we're hoping for the mean reversion to come back in. Now, Heikin-Ashi charts are different than candlestick charts. All right, and sometimes you see, these long wick candles here. When you see these longer wicks to the upside, that's actually a good thing. Okay, that means that there's some strength. So it's not reversals. But the idea is that we're looking for dojis, all right, to be our entry points, and when we can get them to change. So, all right, we're down a bit on this one, and probably jumped the gun a little bit too fast, but I still like the overall trend of euro here. I mean, we'll probably pull back to, yeah, there we go. We're going to pull back to here, and I'm going to stop myself at this lower band here, about 140, 106. So that's going to be where I'm going to set this stop up. And I'm looking for a move back up somewhere to around this area. So say 140, 130. Let me just put the stop in, and we'll go right there. Okay. And nope, looks like we're going to get stopped, man. Ouch. So wasn't a good setup. Didn't look so hot. Where do we buy this thing? We bought it at 12. So yeah, we were looking for a bounce to 30. Hasn't happened, but let's see here. Nice little trade possible on price action analysis. Can you look at that chart now? S&P on the 1 hour. Is that what you want to look at, Rocky? S&P on the 1 hour chart? Let's see. On the hourly. Okay, what are we looking at here? Are you talking about a little bit of a reversal here ahead of 1275? We'll look at that in a second here. Okay, yeah, I see this little shooting star candle, top of the band, 1275 resistance. The question is, how far are we going to pull back? I mean, I think 1250 is going to be a decent area of support, and perhaps 1255 even at this R1. You can see that the R1 here was, I'll just show you right there. I'll just draw a little bit of a line. Okay, you can see this. All right, so that was resistance before, probably going to act as support. So got about $10 to the downside. All right, we could stop ourselves just up above there, which is about, again, that's about $10 as well. So it's really more of a one-to-one risk to reward trade there, which I'm not certain that I like those odds on the 1 hour chart. But had we maybe picked it off a little bit higher up here, then I think it would give us a little bit more juice. 1259 on the weekly R1. Yeah, possible. Let's see. Let's look at the weekly. You know what? I've got the pivots just set to the daily, so I'm going to leave it at that. But yeah, those are all levels. Let's see. Question, Mike, in the top left corner shows Bollingers for USD CAD. What are we talking about there, Mike? By the way, it looks like we're still in here on Euro, and we're moving just a little bit back up, so we're back in the range here, but it doesn't look super duper promising. So we'll see. On the Euro 1 minute, you're talking about USD CAD Bollingers. Oh, right here. Yeah, what the heck is this? Why is that? That doesn't make any sense. Euro 222. That's you know, I hadn't even noticed that, Mike. That's a good question. Let me you know what I'm gonna do? I want to change this one. I want to see if this makes a difference, or if maybe it's just something goofy with the way this is showing up. But let's see if this puts up a fourth, or if it's just the same. No, it looks to be about the same. So I'm going to just remove that one. Yeah. Okay. You know, I don't know what that was. It just looked like some sort of goofiness with the trading platform. I actually had problems with it yesterday, so I don't know if it was related, but that's a good catch. You know, sometimes I'm not even paying attention to that stuff, which is yeah, sometimes maybe not a good thing, especially when you're relying on you know, these indicators. But this has been all right in the past. So all right, so we're still in here in Euro. We're down a 2 pips, which okay. You know, again, it's one of these days where, you know, I'm not loving the trades. It's kind of like, you know, okay, great. We've gotten in with the trend. We caught a little bit of a pullback. You know, that's about as best as we can hope for at this point. So how am I going to manage this trade? Well, here's the thing, is that I've got the target. I'm thinking a return up to about 141.30 is going to be nice. But one of the things we can do with this is we can play something that I just call as simple as red light, green light. And I don't know if anybody ever played that game when you were a kid, but, you know, it was like one of these things you did in gym class where, you know, you call out red light, green light, and you're running when it's green, and then when they say red light, you have to stop, and whoever gets caught moving is out. But aside from that, you can essentially do the same thing with this setup, is that, you know, when you got green light going, you can stay in the trade, and then you may want to get out at that first red light, depending upon where it goes. I mean, with the choppiness that we're seeing in the market right now, I'm probably not going to play it that way, just because, you know, these things can change on a dime. But that's one of the ways when you have a little bit more of a range-bound market and you get a little bit more action happening, the ranges are a little bit wider. Okay, that's one of the ways you can play this. You can see it right here. You know, this isn't an ideal entry by any means because we're looking for dojis, but assuming that this candle right here were a doji, you could see that once it went red, you could have stayed in at red until it went back to green, and you would have taken out about, you know, I don't know, 20-something pips thereabouts. All right, but you can see we're still green here. So, you know, the candles are going to change, red to green, but we're still in this trade. All right, we're down a little bit, 3 pips, and we'll just kind of wait and see. I mean, hoping for that revisit. We got the stop in, not a big risk here, and you know, kind of wait and see how this plays out. So, anything else anybody else wants to look at while we're scoping things out here? Okay, you can see on that 5-minute we did get a better pullback on Aussie. All right, and somebody mentioned pound earlier. We can see cable. Oh, we can see cable. Yeah, there's a nice pullback there, and it looks like we're sitting just underneath 160.50 area, which at the 20 period, that could be a little bit of resistance. All right, we could revisit this lower band here, just about 160.20. All right, again, this is kind of a one-to-one risk-to-reward trade, so I'm not loving it from that perspective. Normally, on these day trades, I'm looking for at least 2-to-1 risk to reward. The scalps are different. The scalps off of this chart setup, sometimes it's hard to give yourself profit targets because if you're just playing red light, green light, you don't know where where it's going to end. So sometimes you can hit your profit target depending upon the strength. Sometimes you can take it a little bit further. So, you know, it really just depends with the profit target. But I just generally try and keep the stops small. All right, you can use the outer bands as your areas to place stops, things like that. Drop it down 1 band, and you're essentially hoping to move from 1 band to the next. So that's how this 1-minute deal works. Does anybody have any questions about the 1-minute scalp? Any other currencies we want to look at? Gosh, got about 10 minutes left here, and You guys are pretty quiet today. I guess everybody's just sitting back long and strong and making money here. Is there anything anybody's got? Any ideas, thoughts, questions, concerns, criticisms? I'll take anything at this point. No, seriously. It's just, like I said, one of these things when, I think we're really gonna, see this rally into the end of the fourth quarter. Window dressing for equities, correlations hold up. All right, euro probably moves back to, I'd say, well, let's look at it on the longer term chart, but I'd say we could get a euro move back to maybe 145. All right, let's take a look here, daily. Yeah, 145. That looks pretty well in hand. So I mean, we'll just kind of have to wait and see. But again, one of the risks in the market was sort of removed. I mean, we had that cloud hanging over us, right, from the euro debt deal, because who knows what they were going to do. All right, they took their sweet time with it, and they essentially could have made this announcement that they made last night and all this wrangling. And again, we don't know what happened behind closed doors, but they could have made that announcement months ago because they did exactly what everybody was calling for, basically. So there wasn't really anything, unique or unexpected that came out of it. It was really just, okay, the market basically put out, all right, here's what we think the plan should be, and boom, that was the plan. So, again, the details are going to be interesting, and I think, as we move into the new year, we're going to have to see, how this works out as far as what other governments do. But, right now, austerity is being imposed in places. Italy's talking about, a big austerity. But at some point, somebody may pipe up and say, wait a second, you know what? Greece got, 50% debt reduction. Why can't we have something? It doesn't have to be 50%, but, we're trying to do all the right things and blah, 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 and not happen for them. So, anyway, I'm like, do I trade Heikin-Ashi on higher time frames, like 30-minute? I do not. And one of the reasons why, and you can do it. I mean, let's just do this. Let's just look at it on the 30-minute chart. You can see. All right, there are going to be times when, you can get into it and find excellent trades. All right, but part of the problem you have is that sometimes the stops are a little bit too big. And for the way that I use Heikin-Ashi, all right, and again, I don't use it with profit targets in mind. I use it in conjunction with this Bollinger setup because I use it really more as like a mean reversion type play where I'm hoping that, price sort of moves back to the center as it, as there's like a lot of volatility or if there's a lot of momentum where it pushes it in one direction on a quick spike, all of a sudden you get a pause, boom, that's a quick reversal, you can jump in, scalp it. Perhaps that's going to be a reversal that goes for an extended period, all right, where if you're playing red light, green light, now you're looking for the reds as the thing's going down. And, you can maybe ride that thing for a while, or maybe you have to get out for, 8 to 10 pips, so it varies. But, when you don't really have a profit target in mind, and, to be honest with you, off of the 1 minute deal, I just picked up the profit target based on the previous highs that we had seen. When you don't have a profit target in mind, or you're just saying, well, you want to sort of get to that idea that the risk to reward is going to be close to 1-to-1, and when you have large stop areas like you would have to have off a 30-minute chart, all right, it's sometimes tough to know exactly where to get out of these trades. So, I don't tend to use it on 30-minute charts. I prefer candle patterns. I prefer support and resistance on longer-term charts, and that's really how I use it. So, I hope that answers your question about the Heikin-Ashi. But, it's Heikin-Ashi it's kind of a cool chart. It takes into account each candle is essentially a candle that is a 2-bar candle. So not only does it take the price action of this current time frame, but it also considers the time frame of the previous candle. So, if you have questions about Heikin-Ashi, you can certainly send me an email. It's just mentor@fxedu. I'd be more than happy to discuss it with you. Also, out on this Twitter machine, man, that's been kind of fun. I don't know if any of you guys have been following me there, but had a tough week with the trading signals that were coming out because a lot of the moves were happening early in the day, and then you get this wicked volatility, and there's a volatility filter that I used for the trade signals, and because volatility was so high, it wasn't really kicking out a ton of them. So the volatility decreased a little bit. I think it was on Tuesday, and then we were able to play some trades, and of course those didn't win, but they were just small losses, about 20 pips total, I think, something like that. So it's the kind of market where if you're not in for the longer haul and you're looking for the bigger move, then you sometimes have to take profits when you can find them. So, that's really been the essence of what's been happening in the market. So, let's see here. Question. So, Mike, before I start scalping on the 1 minute, do I usually change it to the 4 hour, 15-5 to draw strength, resistance, bids, and then change it back to 1 minute to watch these lines? For this strategy, Mike, no, I do not. And the reason is this, is that when I'm using this Heiken Ashi deal, it's really more of a specific setup. And it's, it's the kind of thing when you have like a system that you're trading, whether it's, say it was just something as simple as like a moving average crossover or something like that with, or a CCI falling out of overbought, oversold. You know what I mean? A lot of those times it's just a signal that you take and boom, you go with it. So the support and the resistance doesn't necessarily matter. But when you're doing pure price action trading, off of something like candle patterns, support and resistance, then yeah, that multi-time frame analysis is important to know where these things are. But for something like this with this little scalping deal, okay, I'm not as concerned about where the overall strength and resistance is, because a lot of times what happens is that this is more of like a momentum type trade where boom, you get some momentum and then it stalls, all right, and you're looking to catch either that immediate reversal or the reversal and then the pullback. So essentially what we did here is we bought on a pullback, and it wasn't a great well, this was a nice one right here, but you can see it didn't set up for us. All right, but here we go. We've got price moving higher. We're about 5 pips in the money, and all right, I identified that target as say 140, 130, but maybe at this point I could sit around and just play green light with it, because I see that the bands are starting to expand a little bit and point higher. All right, so maybe these puppies are going to open up, and we're going to see a big, boom, 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 and perhaps I can get out around closer to 40. All right, here we are. We're at 140, 130 right now. All right, so you can see we got about 8 pips in the hopper, 9 pips, something like that. 9 pips. There we go. And I don't tend to usually place limits on these things, although on a day like today, probably should. I mean, 10 to 12 pips is probably going to be sufficient, but I'll probably be a little bit overly stubborn and look to take a little bit more out of it, just because I haven't done a whole heck of a lot today. So, if I end up taking a small loss on this one because I'm trying to get more, okay, well, big deal. But, by and large, depending upon market conditions, sometimes place limits, other times not so much. So, let's see, Euro Aussie 4 hour. Why moving down when Euro and Aussie have been moving similar? Any thoughts? Euro Aussie. Well, yeah, here's the deal with the Euro Aussie. What chart do you want to look at? You said 4 hour? Let me just pull this up. Where the heck is it? Euro Aussie 4 hour. Okay, so why is Euro Aussie moving down when Euro and Aussie have been moving similar? Well, you have to think about how they move similarly, right? They basically move similarly because of Euro dollar and Aussie dollar are highly correlated pairs to one another, because they both have the dollar in common, right? Dollar's weak, Euro's the anti-dollar, it's going to go up, Aussie's going to go up as well. But if you just take Aussie and Euro and pair them versus one another, well, which is the more attractive currency? Well, it's obviously the Aussie, right? Why is the Aussie more attractive? Well, because of the interest rate component, right? You could take that on a carry trade, all right, short the Euro, buy the Aussie, and you've got something like a 3% interest rate differential there. Not to mention that, all of this stuff going on with the Euro has been a disaster, number one. We don't know what the ECB is going to do as far as, we talked about the CFSF thing. And, are they going to do some money printing to throw in it as well? So, all right, gang. Well, look at, I'm running out of time here. I'm just getting the nod, but I'll just show you back. All right, we got about 13 pips now on the thing. So you know what? Maybe I'll just take the money and run here, show you that indeed I can take profits and not be a pig. I'm jam out of that, and let's see what we did. All right, so profitable trade, hip hip hooray, 15 pips. I guess I'll take it for now. Maybe there'll be some more scalps happening throughout the day. And if you guys have any questions, follow me on the Twitter machine, all right? I'm going to put my little thing up here for you. It's just at FX Mentor Mike. And, I look forward to, let me type it. Look forward to seeing you guys in the next webinar. So that's what I've got. Have a great day, gang, and good trading to all.